Hello students, and welcome to week 4 of Income Tax Accounting 2. We're looking at our D2L homepage. I'm going to start as usual by scrolling down and looking at the calendar. Today is Thursday, November 14th. So our original post is due tomorrow, Friday, by midnight, and then by next Monday you need to have wrapped up all your posts for the discussion and gotten all your assignments submitted. And you can see we're rapidly approaching the end of the course here on November 25th. If you think you're going to need some more time, let me know prior to this. I will accept homework assignments after this if you've made arrangements with me to do so. However, if I don't hear anything out of you till the 26th, that will be too late. So let's scroll back up here and look at what we're going to be doing in week 4. We are looking at partnerships. Last week we did corporations, so now we are going to look at partnerships and how that income flows through the partnership return to the partner's individual income tax returns. Our reading for the week is chapters 15 and 16. In our discussion, we have an individual here, or a corporation, Danvers Inc., who has a $395,000 capital loss carryover that will expire at the end of this current tax year. So they need to use it or they're going to lose it. Okay. They also have been the general partner in a partnership for 3 years, but they plan on ending it after this year. So when they end this, they are going to just cash out. They'll get $50,000 cash. They're going to get land that has a fair market value of $400,000, but a cost basis to the partnership of $120,000. Okay, so prior to doing all this, they have an interest in the partnership of $150,000, which includes some debt, $100,000 worth of debt that they're responsible for as well. So in your original post, you need to present a possible way for them to take all of this on their taxes and not lose this capital loss. So how can they apply this loss against potential income here? So you will present that in your initial post. So moving on, in Connect, we're going to do the Learn Smarts for both those chapters. We are going to have multiple choice for both those chapters. We are going to do problems over in Connect for both those chapters. We have one problem each, and then we have another tax return assignment. So I know the corporation assignment was a difficult one, and a lot of you struggled. Please do not hesitate to ask me for questions. Those who did really well typically were the ones who were asking lots of questions, and I am still working on grading those. Those are quite long for you guys to work on and prepare. They're also quite long for me to grade. So, but in week 4, we're going to do a partnership return for AAA plumbing. So if we go up here to Resources, Content, and Course Documents, you can see here's the week 4 assignment. With all the details about AAA. I have attached the 4 forms you're going to need. You're going to need the Form 1065, which is the basic partnership tax return. So here is all the information about them. They have 2 owners here. Michael Rodriguez, who has a 50% interest in the partnership, and Devontae Johnson, who also has a 50% partnership or ownership. So that means you're going to need to complete the Schedule B1, which is only required for partners owning 50% or more. Well, both of them own 50% and will need to be included on that. I've also attached the Form 4562 for their depreciation. And then there's the K1, and you have to fill out a K1 for each partner. So there'll be one K1 for Michael Rodriguez, then there'll be another K1 for Devontae Johnson. So when you're done, you're going to have your 1065, your B1, your 4562, and 2 K1s, and those will get submitted to the Dropbox. And again, please do not hesitate to email me questions.